Hi and Assalamualaikum. My name is Maswani Iqmar binti Azli with metric number S56075. Now I want to present and explain my individual assignment for subject FAR 3. Let's begin with the choosing companies. Firstly, I choose Kind Holdings Berhad and secondly, Melux Corporation Berhad. These two companies under consumer products industry. I choose liquidity ratio for this assignment. Liquidity ratio measures a company's ability to pay debts, obligations, and its margin of safety through the calculation of metrics, including current ratio, quick ratio, account receivable turnover, and inventory turnover. Before I show you my calculation, I want to share with you these two company financial statements. As we can see, this is Kind Holdings Berhad statement of financial position. Next is statements of profit or loss for Kind Holdings Berhad, and also the statement of financial position and statement of profit or loss for Melux Corporation Berhad. We will start with current ratio. The current ratio is a liquidity ratio that measures a company's ability to pay short-term obligations or those due within 1 year. It tests investor and analyses how a company can maximize the current assets on its balance sheet to satisfy its current debt and other payables. The formula to get current ratio is current assets divided by current liabilities. So I will explain it by the company. Firstly, Kind Holdings Berhad, the current assets is RM246454000 divided by the current liabilities 132641000, and I got the current ratio 1.86. For the Melux Corporation Berhad, the current assets is RM459999279 divided by the current liabilities 172269492, and I got the current ratio 2.67. And you can read the interpretation result. For my comment is, Kind Holdings Berhad has 1.86 ability to repay against RM1 current liability, and Melux Corporation Berhad has 2.67. So this implies that Melux Corporation Berhad has more ability to repay its short-term obligation. Secondly is quick ratio, or known as acid test ratio. The quick ratio is calculates and measures the ability of the company to pay its current liabilities and debts. The ability of companies to pay off its short-term obligation without relying on the sale of inventory. The formula to get quick ratio is total current assets minus inventories minus prepaid expenses divided by current liabilities. For Kind Holdings Berhad, the total current asset is RM246454000 less the inventory 8213600 and don't have any prepaid expenses, so the answer is 164318000 divided by the current liabilities 132641000, and I got the quick ratio 1.2388. For the Melux Corporation Berhad, the total current asset is RM459999279 less the inventory 18019,726 and prepaid expenses 2159657. The answer is 25819,896 divided by the current liabilities 17226,492 and got the quick ratio is 1.4988. For the interpretation result, you can read there. And my comment is Kind Holdings Berhad has the quick ratio of 1.24, whereas Melux Corporation Berhad has 1.5 chances of paying off its short-term obligation without relying on the sales and inventory. Next is account receivable turnover. The receivable turnover ratio is an accounting measure used to quantify a company's effectiveness in collecting its account receivable or the money owed by customers or clients. This ratio measures how well a company uses and manages the credit it extends to customers and how quickly that short-term debt is collected or is paid. A firm that is efficient at collecting on its payment due will have a higher accounts receivable turnover ratio. Higher ratio means the companies are collecting their receivables more frequently through the year. The formula to get account receivable turnover is net credit sales divided by average account receivable. Firstly, we need to calculate average account receivable. In order to get the average account receivable, I need to go to statement of financial position and need to take the amount of account receivable for the both years, which is 2019 and 2020, to get the average account receivable. This is my calculation for average account receivable. After I got the average account receivable, I can proceed with the calculation. For the Kind Holdings Berhad, the net credit sales is RM 478,999,000 divided by average account receivable 88,112,500, and I got the account receivable turnover 5.4362. For the Millards Corporation Berhad, the net credit sales is RM 72994,971 divided by the average account receivable 184,00987.5, and got the account receivable turnover is 3.9669. So there's this interpretation result and also the comments. Lastly is inventory turnover ratio. Inventory turnover ratio is an activity ratio and is a tool to evaluate the liquidity of company's inventory. It measures how many times a company has sold and replaced its inventory during a certain period of time. The formula to get inventory turnover ratio is cost of goods sold divided by average inventory. So the first thing that we need to do is we need to calculate average inventory. To get the average inventory, I need to go to the statement of financial position again and need to take the inventory's amount for the both year to get the average inventory. So here is my calculation. For Kind Holdings Berhad, the cost of goods sold is RM 324,244,000 divided by the average inventory 78344,000, and I got the inventory turnover ratio is 4.1387. For Millards Corporation Berhad, the cost of goods sold is RM 58,410,309 divided by average inventory 18350,178, and I got the inventory turnover ratio is 3.1831. So you can read the interpretation result, and my comment is the inventory turnover of Kind Holdings Berhad is 4.14 times and Millards Corporation Berhad is 3.18 times. Here the best ratio is Kind Holdings Berhad, that is much better than Millards Corporation Berhad. So I think my explanation for these individual assignments is done, and thank you so much Dr. Sharity for giving me this opportunity to do the individual assignment. Thank you.